Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about NIO's NIO stock. First, we'll be analyzing an article about their projected fourth quarter results, which will be released on March 1st. After that, we'll be diving into an article about how various brokerages and analysts actually have a buy rating on NIO stock, despite various macroeconomic uncertainties that we are facing over in the United States and China, as well as some geopolitical risks that I want to make you aware of. After that, we'll be analyzing a bearish negative article regarding two reasons why this author believes that NIO stock will actually continuously lose value throughout the year of 2023. And then lastly, we will compare Tesla to NIO very briefly while also going over their top price targets. So for more videos just like this one, remember to go and annihilate that like button, subscribe if you are new, comment your thoughts down below about where you think the NIO stock is headed in the future, and if you believe they will have a positive earnings report on March 1st. Subscribe if you are new, and without further ado, let's jump right into it. NIO is an electric vehicle maker that is located over in China, and right now, Wall Street is very excited about NIO's potential over in the Chinese EV market, to where currently many analysts and professionals actually have a $17 price target for this company, which implies a 67% upside potential for investors over the next year, considering that the current share price is trading for close to $10 per share. NIO is also getting a lot of publicity due to their approaching earnings report on March 1st, to where the company is expected and projecting to bring in a net loss per share of 26 cents and revenues of around $2.57 billion. Hopefully NIO can beat both their EPS as well as their revenue estimates, but we're going to have to wait for March 1st to determine if that will be the case. But there is an article which analyzes their ability to beat or miss on their EPS and revenues, which could negatively impact their overall share price. But considering that Wall Street is very bullish on this company, and on top of that, many brokerages, to where right now the average brokerage recommendation, also known as an ABR, is 1.5. The reason why we are looking at an ABR is because it gives us a spectrum to where brokerages and professionals believe if this company is a good buying opportunity. For instance, an ABR gives us a range between 1, which is a strong buying opportunity, and a 5, which is a strong selling opportunity, to where they perform analysis on a stock and they give us a rating. And because NIO has a 1.5, which is very close to 1 and very far away from 5, this indicates that NIO, according to this ABR rating, that indicates a strong buying opportunity or a buying opportunity. But let's discuss why that is later in the video. But right now, I want to go over some of the bearish and negative arguments, particularly this one stock reporter who believes this company will lose value over the next 12 months, which again is possible, and that's why I am making you aware of this information before you make an investment decision, because you really need to weigh the risk to reward here. First off, and I 100% agree with the author, the geopolitical tensions between the United States and China are at recent highs, considering the spy balloon incident. And although the author doesn't give much credence to how this is affecting NIO's share price, I do think this is something investors need to be aware of, because if any tensions increase between the United States and China, we can anticipate a downward trajectory for Chinese stocks, including a Chinese EV maker, which is an electric vehicle maker over in China, such as NIO. Investors need to pay explicit attention to the geopolitical environment and keep up on the latest news, because any problem between the East and the West, or the US and China, could cause the NIO share price to decrease. As of right now, I do think we are over that whole balloon fiasco going on, to where it hasn't negatively impacted the NIO share price as of right now. Now, the main thing that the author points out is their slowing growth. And I think he is making some presumptuous assumptions. However, with their earnings report coming out, we will be able to determine if this financial reporter is actually correct and if their growth rate is slowing at a substantial margin. NIO currently right now is facing a sales challenge, to where NIO's deliveries actually dropped off for a variety of reasons. However, investors are still hopeful that when it comes to the fundamentals of this company and their overall growth and delivery numbers, that will gradually improve as time progresses. But how realistic is this? The author highlights two more reasons why he believes the NIO share price will decrease over the next year. And the first reason is that NIO as a company is facing rising competition, which we will talk talk about in our next article when we compare NIO briefly to Tesla. As competition increases, the NIO stock price could falter, especially as other EV makers and electric vehicle manufacturers continue to develop and sell their vehicles quicker than NIO. The author believes that since Tesla has slashed their Chinese vehicle prices and even prices over in the United States, this has reflected into more demand for Tesla's vehicles, which then took away market share from NIO. And the author uses this as evidence for NIO's less than impressive overall sales figure for the month of January. The author's second reason for the NIO stock price potentially decreasing over the next 12 months is that the market could be overestimating the extent of China's reopening. Essentially, China is still trying to recover from all of their lockdowns. And if China's macroeconomic recovery is slower than what investors anticipate, this could reflect negatively on NIO because they are not growing as quickly as investors think that they should be growing at. And again, we will get more information regarding their growth rates once their earnings report comes out on March 1st. At the end of the article, the author highlights that given both of these reasons of rising competition and NIO's growth overall faltering, this is going to be a giant weight on the NIO stock price, to where he believes the share price will either remain stable or that it could even fall over the next year. Now, with all of this negative bearish information in your mind, let's move on to a more positive article which compares NIO to Tesla. Tesla and NIO are some of the top two electric vehicle companies on the market right now, to where both of these companies are benefiting greatly from the recent surge of consumers who want to drive electric vehicles. Now, I want to say right off the bat that I personally own much more Tesla than NIO, mainly due to their geopolitical risks. That's why I don't own more NIO stock. And if we look at Tesla compared to NIO regarding their overall smart score, Tesla ranks at an 8 and NIO ranks at a 4, to where 8 is higher than 4, making Tesla a better buying opportunity according to the smart score. But we're not necessarily just going to focus on the smart score. Let's discuss what this company could make of itself over the next 12 months. If you are an investor who can take on some extra risk in your overall portfolio and you believe in the electric vehicle market in general, it seems that NIO could be a good buying opportunity. But it's not going to be everyone's cup of tea, considering the major risk you are taking on by buying a foreign electric vehicle company. I also want to highlight that billionaires such as Dr. Michael Burry and Berkshire Hathaway's vice chairman Charlie Munger, who is the right-hand man for Warren Buffett, are very bullish on some Chinese stocks, meaning that they are not scared of the recent geopolitical turmoil that's going on between the United States and China. Charlie Munger in particular highlights the company BYD, which is one of my favorite electric vehicle companies over in China, to where Charlie Munger notes that it's almost ridiculous how far BYD is ahead of Tesla over in China, meaning that BYD is selling their electric vehicles not only more quickly, but they're also just leagues ahead of Tesla, meaning that Tesla will have to catch up, which I think is definitely possible because over the next few years, Tesla is supposed to scale very dramatically. But where does this leave NIO? Well, NIO looks to be the underdog when compared to either BYD or Tesla. Tesla, according to Wall Street, has 22 buy ratings, 6 hold ratings, and 3 sell ratings, making the average TSLA share price target worth $202 over the next 12 months, which is actually a decline of around 2.8% compared to where the share price is actually trading at right now, which is $208. Clearly, Wall Street is not bullish on Tesla. However, I personally am. I am overall more bullish on Tesla than I am for NIO. However, I do think NIO is a good company, and let me tell you why. Once we look at the accounting ratios of this company, NIO is a better value buying opportunity for a value investor. Why are so many people bullish on NIO stock? Well, one of the reasons is because 7 analysts have a buy rating on it, while another 3 analysts say to hold the company, while none of them say to sell the company, which is very good news. On top of that, the current share price just trades at $10, while the average price target for the company is close to $17. And this means that investors could potentially get a 70-cent return for this company over the next 12 months, which is why in the short term, NIO could return to investors a lot more value than Tesla can, at least over the next 12 months. If everything goes right for NIO and the earnings report is positive, we could really see this stock pop off. However, if the earnings report is negative, like the former financial reporter said it would be, then we could see this company either maintaining their value throughout the year of 2023 or losing value throughout the next year. I personally think that they could actually have a pretty good earnings report, but we are going to have to wait for March 1st to find out. In general, I own much more Tesla than I do of NIO, but I would love to hear your thoughts down below about where you think the NIO stock price is headed in the future, and if you think they will beat on their overall earnings and revenue regarding their approaching earnings report, or if you think that they will miss those estimates. I would love to hear your thoughts. Remember to subscribe if you are new, and I will see you in the next YT video.